Hey guys, I hope you all are doing good. So I wasn't around last week and that's why you didn't see the market focus. And it's just because where I was at, it was difficult for me to actually get the recording up and everything. It was really tight for me to get any work done on the chart. So I'm around now. So let's pick up from where we left off. So I had a trade I was in, I think the week before last. So let's do a trade recap. Alright guys, so looking at this, it's still gold. I've been focused on gold for the past weeks. So I'll show you guys the trade I had, and I think it was a sell one. So we had this sales around the, when was this? We reattempted this sales around the 15th. So right here, so we reattempted the sales on the 15th. And if you look at it, it's a very simple structure move thing. So once you have an impulse, you're waiting for a correction. So it's the same thing. We had an impulse. So if you look at this, or if you consider this as a channel, and then it becomes very easy, like what you're looking at. You have an impulse, and I was waiting for price to give me this correction move to the downside. So the trade management on this was quite easy because we closed this at plus 7.96%, and I think price went further than 7.96. So you look at this, we had an entry around here and took prices all the way to the downside. Once we had this inability around an area like this, and I think by then it was around Friday, it was just looking a little bit too choppy around this area, and you can look at it. So I closed this position at 7.96%, and after that I had a buy attempt on this same pair. So eventually we had price breaking out of this channel thing, and we had price then moving to the downside. So I had to reattempt the buys, and the principle again is the same. Once you have an impulse, you wait for a correction, you look for the buys. So taking out this area, everything to the upside was an impulse, and this for me was a correction, and I was looking for buys to take out this area. So the initial buy attempt on this, I got stopped out on this piece right here. So I got stopped out, so that was a -1. And yesterday I did reattempt the buys again on gold. So same principle, you look at this piece, it's an impulse, you get a correction, you look for buys, you get a correction, you look for buys. So if you take out everything and you look at this main structure right here, everything is an impulsive move to the upside, same thing, correction, and I'm looking for buys again to the upside. Now the first part for me is this structure high right here, and we still have this area we haven't gotten to, and there's a minor psychological level of 3,500. So if gold has to move again to the upside, I'm looking at areas like that. But personally, this piece right here is the first area I'm really looking at, and if price gets to that point, then we'll reanalyze and see what price is trying to do. Now this is what I took based off the structure I was looking at on Friday, but then we'll reanalyze again and see if this trade is even going to launch to the upside, or if it's just going to reverse and take us out. So that's it right there. 7.96 was a good one, -1 already on the first buy attempt, in on the second buy attempt. So let's go ahead and do a proper analysis of the other pairs. All right, so let's start with the DXY, and we're looking at the DXY on the monthly time frame. Normally you're not trading on the monthly time frame, but it's very important you look at these time frames just so you can understand what price has been doing over, let's say, on the bigger picture thing, so you can understand what price has been doing from what the big boys are really trying to do. So you're looking at this move on the DXY, and here's on the monthly time frame. If you pay attention to this piece right here, so price has been in this downward trajectory for about, that's 1, 2, 3, 4, 5, like 5 months. Price has been moving or dropping to the downside, and we're currently trading below 100,000, this psychological level right here. So we're trading below this area. Now if you look at this based off of psychological levels, once you start trading below 100, the next point of interest has to be the psychological level of 90,000. So we're coming off of 100 and we're expecting prices. So if the sellers keep taking prices to the downside, the next point of interest for me on the DXY is to see prices testing 90,000. Now we had this trend line thing right here, and this was a big factor for me. So at the time I was looking at this once price came to an area like this. So I was looking at this and saying, if we get a rejection at this point, in as much as we're expecting prices to move all the way to 90,000, but if we get a rejection and this trend line holds, then we could see a reversal and price coming back to the upside, trading above 100. You get, let's say, a pullback thing to an area like this, and you see prices moving to the upside. So that's what I was looking at. But when you look at what price is doing, and the month is gonna end in a couple of days. Now, if this candle right here, which is a monthly candle, I'm just gonna zoom in right here. So we're looking at this monthly candle. So if this monthly candle, and this is for the month of June, so if we end up closing below this trend line, it doesn't mean the buys are completely over. It just means for a brief period we could see sellers dominating again before the buyers resume. So it's always an impulse correction. An impulse correction. So you're looking at the same thing. It's an impulse, you get a correction, you wait for the buys again. So it's just a similar thing. If we get price trading outside, you might get a further move to the downside before buyers stepping in again impulsively. So that's what I'm looking on the monthly time frame. How is this monthly candle going to close? This piece right here. Because looking at this, in as much as we're saying prices moving to the downside, 5 months already, 1, 2, 3, 4, 5, and we've been dropping to the downside, there's still a possibility this might be a fake out thing, and you see, let's say the next month, July, comes in and you see price coming back into the trend line thing, you get a test and you see prices moving again to the upside. So you need to pay attention to what's happening on every time frame, and that's why I'm still looking at the monthly time frame, just trying to understand what the big boys are trying to do. Now that's on the monthly time frame. If you step down to the weekly time frame, so on the monthly time frame, you have this massive structure thing we've been looking at, and it's simply been an impulse correction, impulse correction, impulse, then a correction. So as I step down to the weekly time frame, what I'm trying to do is look for structures I can play with. So once I step down on the weekly time frame, the sales coming in on the monthly time frame, for me, this sales, you can look at it as the current structure thing. So here's what is currently in play. So the DXY has been selling for 5 months now, and this sales, we started around 110. So this psychological level of 110, price came to 110, we couldn't break through 110, took prices all the way to the downside to 100. We've gone through 100 and now price is moving again to the downside. So most likely, if this selling pressure increases, then you could see prices moving all the way to 90. So 110, 100, the next point has to be 90. Now bringing in the trend lines, you can look at it in this form. So you can bring in the trend lines and look at it as a channel thing, just so you can account for price interaction from both sides. So looking at this space, it's an impulse correction, impulse correction, it's an impulse as a correction, then you have a minor structure within this area. So once you put everything into perspective, that's the channel I'm looking at right there on the weekly time frame. There's been an inability for prices to go through 100. So where is price most likely going to gravitate to? The next psychological level, which is 90. So if price has to keep moving to the downside, how then do we gauge this movement to the downside? That's where the channel thing comes in. So on the weekly time frame, you have an impulse correction, impulse correction. So based off of this, I'm still expecting prices to drop to the downside, but then you have to pay attention to what's happening on the monthly time frame as well, because this piece right here, what you're looking at right here, could simply be a fake out thing, and you see price reversing back into this monthly channel, and you see price moving again to the upside. But if everything stays the same and price keeps trading outside this trend line, then you can continue with this movement thing on the weekly time frame and just keep gauging the movement thing to the downside. So we're trying to gauge how prices drop into the downside. Now on the weekly time frame, since we've had this impulsive move and we had this correction thing, if price has to keep moving to the downside, then the next part we're anticipating is for price to drop, let's say, keep giving you impulse and corrections all the way to this area right here. So this right here is going to be very close to this psychological level of 90, and if price keeps dropping, that's what we're looking at. So the coming weeks, it might take about 5 weeks again for price to even drop to the downside. It might take, let's say, 8 weeks, 9 weeks. So I don't know how long it's going to take, but if the sales have to keep coming in, then that's the piece we're looking at right there. On the daily time frame, real quick, so you have the same structure on the weekly time frame. So we're looking at this massive play on the weekly time frame. It's an impulse, it's a correction. Then on the daily time frame now, we have minor structures I'm looking at. So it's an impulse, it's a correction, impulse, correction, impulse, correction. So similar to what's happening on the weekly time frame, there is this minor structure on the daily time frame. So it's the same thing: impulse, correction, impulse, correction. So here is a piece I'm really focused on coming into next week. So now I'll start paying attention to what's happening on the daily time frame, the 8-hour time frame, and the 4-hour time frame, because we have this piece we can play with, the structure right here. So it's an impulse, correction, impulse, correction. So you can use again the same thing, use a channel and just gauge the movement thing, and we're still trading below 100,000. So that's on the daily time frame. Now 8-hour time frame. So what we're looking on the 8-hour time frame, so once you leave from the daily and you drop down to the 8-hour time frame, the impulse corrections, you start seeing it better because you have more price action to deal with. You have an impulse, you have a correction. So based on, like, going off of this structure, like the market flow thing, and if you understand the concept behind market flow, you can take a very big structure thing, you break it down into minor structures, and then you look for the flow within the bigger picture thing. So the flow currently, it's an impulse, correction, impulse, correction, then you get another impulse again. So I'm expecting prices to respect this structure right here. So you have this trend line on the downside, and you have this trend line to the upper side of it. So it's an impulse, correction, impulse, correction, then another impulse thing. So I'm expecting prices at least to get to an area like this. So based off of this analysis, you'll probably see why I have the trade I have on gold currently. I don't think I mentioned that during the trade recap, but I have a trade currently on gold, so I'll show you guys. And based off of this structure on the DXY, that's where you have my analysis thing coming from. So it's an impulse, it's a correction, it's an impulse, it's a correction. So the anticipation again is to see prices dropping again to the downside on the DXY. So that's on the 8-hour time frame. Let's see the 4-hour time frame. Perfect. So once you step down to the 4-hour time frame, just the same thing, using trend lines, and you can use trend lines or channels to gauge the movement of price to the downside. So the same thing, it's an impulse, it's a correction, it's an impulse to this area. So you're looking at the reactions from these areas. There's a pullback right here, and I'm expecting prices again to drop to the downside. So that's it right there. Probably the hourly is the same thing. So looking at this structure on the hourly time frame, so if you look at this piece right here, it's an impulse, it's a correction, it's an impulse, it's a consolidation. So there's two ways I look at prices. If prices move into the downside, impulse, correction, impulse, or you get an impulse, you get a consolidation kind of thing, and you still see prices moving to the downside. If it's price moving to the upside, is the same thing: impulse, correction, impulse, or you get an impulse, consolidation, then you get an impulse. So that's how I'm looking at prices. So based off of what's happening currently on the DXY, so you had this rejection around an area like this. So I'm expecting prices again to give us the next wave thing, so the next impulsive move to the downside. So that's it right there. If you look at this, that's the hourly time frame. This seems to be in sync with what's happening on the weekly time frame, the same movement thing to the downside. So I'm still expecting sales on the DXY. Now, if this, let's say coming into next week, we get price breaking out of this area, then we could look for a test of this area, and you see prices moving to the upside. Now that's just a secondary thing for me, because primarily I'm still looking at prices moving to the downside on the DXY. So that's my analysis right there on the DXY. So let's take this piece of price action, let's look at what's happening on the DXY, then we use this same analogy and apply it to the other pairs. But if the DXY is then moving to the downside, the first pair we're looking at has to be gold, and let's see if those buys on gold is going to come in. But we need to reanalyze gold and take it from there. Alright guys, so let's look at gold, and I haven't recorded in, let's say, a week and so, and I'm feeling tired already just talking and doing the analysis on the DXY. Alright guys, so let's start with gold. So look at gold, and if you remember what we was looking at on the DXY, we're expecting sales to come in on the DXY, but for gold, let's start on the daily time frame. Perfect. So look at this structure thing on gold. So this is very important. When you look at this piece coming all the way from this side, is an impulse, it's a correction thing, impulse, correction, impulse, correction. Then there's been an impulse and there's been this consolidation thing, and I mentioned it already. You can see price doing this impulse correction, or you see price doing an impulse, you see a consolidation, and then another move again to the upside. So those are the things I'm looking at. But on the daily time frame, there's something that's really concerning about gold currently. So I had a post on the community tab talking about taking gold all the way to like 4,000, and at the time price was around an area like this. So I was looking at this rejection thing at this point. That's a pivot point for me, so I was expecting prices to move again to the upside. Once we had a break on the DXY from the monthly time frame with price moving to the downside, I was expecting a counter reaction thing from gold and to see this impulsive movement thing to the upside. However, we had a push, then we had price coming back. So that was a trade thing I had right there. So I had the buys off of this area somewhere around here, and it started moving a little bit to the upside. Then this sales came in and it took me out. So looking at this and going off of the posting I was even talking about, I was expecting gold to get, let's say, a rejection thing around here, and you see an impulse, you get some kind of rejection around 3,500, and for us to see prices moving again to the upside. So that was a bigger picture thing for me. Now this is on the daily time frame. When you look at this on the daily time frame, we've had this trend line thing. So there's two trend lines I'm looking at, and it's gonna come in handy. So you look at the first trend line, this one right here. So looking at this, price was still respecting this area, rejections. You had rejections off of these areas. You had another rejection right here, and I was expecting a rejection around an area like this, because once price establishes the pivot points, it's very easy for you to analyze price as it pulls back to these areas, and you're looking at those pivot points and you're taking prices again to the upside. So looking at this on the daily time frame, I was expecting prices to reject around an area like this and for us to see prices moving again to the upside. Now we have price trading outside this trend line. So you look at this piece right here, you have price trading outside this trend line. So there's two things while I'm looking at this. Now the first thing is, where is price at? The bigger picture thing. Where is price at, and where is price most likely going to gravitate to? And we've been talking about this for the longest time. We had a rejection around 3,000, so we had price trading into 3,000, and the next part for me, just going off of this, was for prices to move all the way to 4,000 based on psychological levels. You had a push thing right here, push, test of this psychological level of 3,000. There was an inability for prices to drop below 3,000. Now price is currently trading between 4,000 and 3,000. We're very close to 3,500, which is this area right here, 3,500, which aligns with this minor structure thing. So we're currently trading between 3,000 and 4,000. Based off of psychological levels, price is headed to 4,000. Now, as price is headed to 4,000, you have periods of consolidations or pullbacks and stuff like this. So this piece right here, you had a pullback thing right here, you had another impulse, and you've seen a pullback. So looking at this, I still have this bigger picture thing, an inability for prices to go through 3,000. I'm expecting prices to get all the way to 4,000. Now, point of concern for me, we had this trend line thing. I was expecting rejections of this area, and price is currently trading outside, so we might see gold dumping again to the downside. Now that depends on what's happening on the DXY as well. If the DXY keeps dropping to the downside, what you see right here as a breach of this trend line could simply be a fake out thing. That's how people call it. It can be a fake out thing, and you see price coming back, testing, and you see the movement thing again to the upside. Now I have a buy position on gold, and I'll show you guys what I was looking at. So in as much as you have price trading outside a trend line, so if you see prices moving to the upside, for example, you see price moving to the upside, giving you a structure like this, and you have a violation of this trend line. So the violation of a trend line doesn't mean price is going to sell aggressively. It can be a temporal sell thing coming in, and then you see prices moving again to the upside. So looking at this, it's very difficult for me to say, like looking at it right now, that gold is just going to drop to the downside. There's a couple of things I need to see. Now, if, for example, gold has to move to the downside, then it's easy because we're looking at this space, and there's this area right here that is empty. Like there's nothing really stopping it. If gold has to move to the downside, then we could see prices coming back to this other trend line thing. So it's a delivery from a trend line on the lower time frame to a trend line on the higher time frame. But that's something that's going to happen if the DXY starts moving to the upside impulsively. So looking at this on the daily time frame, we've had price trading outside this trend line. So what's the next thing we can do? Step down to the 8-hour time frame. So on the 8-hour time frame, I'm looking at this currently. So the first thing I'm asking myself is, if price is moving to the upside, then it gives you an impulse correction thing. So looking at this entire piece, impulse correction, impulse correction, impulse correction, we had this area taken out. That's very important to me. So with that area being taken out, then everything right here, it's an impulse, and everything coming back is a correction. So I'm still looking at this as an impulse correction, and I'm expecting prices again to move to the upside. So it's not different from what we had here. We had an impulse, and you could see this minor area taken out right here. So we had an impulse, you had this minor area taken out. Now when you look at this and the way people analyze prices, you might look at this minor area being taken out and you think it's a change of structure or character. I think that's what people call it. And you think price is going to move to the downside impulsively. But I look at it differently. It's an impulse thing to me, and it's a correction. Then the next wave comes in. So it's the same thing I'm looking at right here. So you look at this piece, we've seen this area taken out. So it's very easy to say there's a change of character or structure. So you're looking at the same thing. It's an impulse right here, because that's the main move thing right there. Impulse correction, giving you this impulsive move to the upside. Then comes a correction thing, and I'm expecting prices to move to the upside. So that's on the 8-hour time frame. If you look at it on the 4-hour time frame, that's where I have my interest currently, and it's just a simple structure thing. You have an impulse right here, and you have the correction coming in. So I was looking at this correction. You had the bridge, you had this push, you had the correction, and you had another push. So I'm looking for buys off of this area to see prices again moving to the upside. Now when you look at this, so the area I'm really paying attention to, if we take the buys and if we get a launch of this buys, that's the area I'm really paying attention to, because we might get to this area and you get a rejection of this area and you see price coming back to the downside. So everything currently matters to me, but I have this impulse and I have a correction. Now I'm looking for the buys. Going off of what's happening again on the DXY, if this guy has to tank again to the downside, so if the DXY has to give, let's say, this movement thing to the downside, then it's going to be very easy, because on gold you might see this bias kicking in again. So you might see a resumption of the bias to the upside. Now let's rearrange this. So I'm looking at this area. I would like to see prices going all the way to like 3,500. If we see prices getting to like 3,500, that's 1:11. But if it doesn't happen, I'll take this piece right here. That's 1:8.9. So let's keep it at this point. So if the buys resume, that's what I'm looking at. Now if I'm wrong with this analysis, then gold is just going to drop to the downside. So pay attention to this. You're looking at the structure right here, this, and you're looking at this piece right here. So I'm buying off of this area. So the first point of concern for me has to be an area like this. So once price gets to this area, because you're looking at what price has done previously, and you might see sellers coming in again. Now an easy way to look at it is look at the DXY. If price comes back to an area like this, and then the DXY is geared to move to the upside, rest assured you'll see this guy tanking again to the downside. But currently I'm looking at the DXY thing. It looks like the DXY is going to drop, and if you look at gold, it looks like this guy is going to move again to the upside. So that's how I use the DXY. put the DXY to one side, put gold to the other side, and look at it side by side. So the DXY and gold, I'm spending so much time on the DXY and gold because I've been trading this for the past weeks, and it's just something I've been looking at a lot lately. So compared to the indices, I haven't spent so much time on those indices because of what's been happening in the US trade war and the tariffs and everything. It messed up the indices for me, but gold and the DXY, I've spent lots of time on this pairs. So that's the analysis thing right there. I don't think I have to move to the hourly time frame, but you can see my trade idea when it comes to gold, and that's it right there. So I'm in on this buys right now. Let's see, I think I mentioned this. Let's pull this up right here. So I took the buys on gold, yeah, right here. So I'm in on the buys. Yeah, I did take the first one. It was a -1 thing. So I'm currently sat in on this pair right now. So that's my buy thing on gold, and it's a swing move. So if you look at this, I think the interest was on the hourly time frame. But if you want to hold this, it's gonna take maybe a week or a week and some days for prices to move to the upside. That's if prices move to the upside. So that's my analysis right there on gold. So let's look at other pairs, and if I have something I'm forgetting, and then I'll come back to gold and let you guys know. All right guys, let's look at the next pair. All right guys, so let's start with the S&P 500. I'll go really quick on the indices. So I'm not really trading these ones right now, but there's a good opportunity thing right here. So I'll start with the S&P 500, do NAS, and then complete with US30. And I'll show you guys why I'm going, or why I'm using this route. So if you look at this bigger picture thing on these indices, it's a very simple structure thing, because you always have this impulse, correction, impulse, correction, impulse, correction. Then an impulse, you're waiting for corrections and for you to see the movement thing again to the upside. Now here's on the daily time frame. Quick question thing. Where is price at currently? So first, if you look at the S&P 500, we've made new highs on the S&P 500. So coming off of this dip right here, man, and here's the thing, yeah. When you look at indices, S&P 500, NAS, US30, you have these impulsive moves, you have the dips, then you have another impulsive move coming in. It's been like this for a very long time. You can go back and like just say previous price action and look at it. It's always an impulse, like crazy movement thing to the upside. You get a dip, you get another movement again to the upside. It's like there's a cheat code when it comes to looking at indices. It's not that difficult. It's an impulse, correction, impulse, correction. Yeah. So when you're talking about impulse and corrections, I think indices is like the easiest one you can look at impulse corrections. So we've made new highs on the S&P 500, but looking at this space currently, using the market flow theory thing, where is price at and where is price most likely going to gravitate to? So price is currently trading above 6,000. That's a psychological level right there, 6,000. Where is price most likely going to gravitate to? It has to be 7,000. So you have this clear path. So you're looking at prices at this area currently. So you're looking at this movement thing to the upside. So there's nothing stopping the S&P 500 currently from getting all the way to like 7,000. There's no previous price action you can look at and say price is going to react off of this area and come back to the downside. There's a clear path thing for the S&P 500 to get all the way to like 7,000. So that's clear, there's nothing stopping it. But then when you zoom into current price action, there's something that's really important to me. You zoom into current price action, you get an impulse thing. There's a minor correction on lower time frames. There's an impulse, there's a correction, there's an impulse, then comes a deeper correction. You get an impulse, it takes out these highs. It's just a shallow thing. You get again a push to the downside, taking out these highs. It's not looking really convincing. You get a deeper pullback and you get these highs taken out. So looking at this price action, you bring in this channel thing just to see the market flow. It's an impulse, then this. So price is moving to the upside, but it's not moving impulsively to the upside. You bring the channel thing, it's a trend line in both directions. So you start looking at this and saying, all right, cool. Once we take out these highs, Or once we took out these highs, you had a pullback. We took out these highs, you had a pullback. We've taken out these highs. So what is price most likely going to do? Same thing, you should expect the pullback thing to come in. Now, if price is pulling back, there's a psychological level right here, 6,000. There's a trend line thing right here. So my anticipation is if price starts pulling back, then you could see the S&P 500 coming back to an area like this, psychological level, trend line, then a movement thing again to the upside. So now there's even a possibility you might see the S&P coming back to this area right here, and you see an inability around this point. You get a drop to the downside and you see price doing something like this, then a movement to the upside. Once you look at it, everything, it's an impulse, it's a correction, and for price to move again to the upside. So that's how I look at prices, impulse corrections. And sometimes the correction is very confusing, but basically that's what I'm looking at. So we're currently sat at this point. If price breaks out of this area, because you have the trend line thing, if we see price breaking out of this area, as I told you guys already, there's nothing stopping the S&P 500 from going crazy to the upside. So you could see price coming back, you get a test of this trend line, and you see price moving to the upside. And in I believe a price to do something like this, then you get price moving down, you get a test, and you see a movement thing to the downside. So that's on the daily time frame. You start moving all the way to the 8-hour time frame. So on these lower time frames, I'm looking for rejections at this point. So there's a similar thing. You had a rejection here, you had a rejection here. So the question is, are we getting a rejection around an area like this? And if we actually get a rejection at this point, then you could see prices drop into the downside. That's one thing. Now, if there's no rejection at this point, then you get an impulsive move. You're just waiting for price to come back, testing this area, and you're waiting for prices to move again to the upside. So all you have to do is look at what price is doing. So if you get an impulsive move again to the upside, wait for the correction thing, testing this trend line area right here, and you're taking prices again to the upside. So it makes it look really easy. But that's it right there. If you get price rejecting at this point, impulse correction, you're expecting to move to the downside. So on the 4-hour time frame, let's look at this. It's just similar to what's happening on the 8-hour time frame. So this area right here is really interesting because you had a rejection thing to the upside right here. You had another rejection from the sellers. So you had sellers rejecting, you had buyers rejecting. Now, personally, I would say if you're looking for sales on the S&P 500, there's a simple way you can do it. Once you're using trend lines, you wait for this trend line to get violated. So there's a trend line thing right here. You can put it this way. Yeah, you can put your trend line like this. You wait for price to trade outside, coming back. Then you can take the sales again to the downside. That's one way you can look at it. So if you don't want to get in like right now, then you can wait for this to come down. So there's also another entry thing you can do here, which is a little bit it's a complex entry thing, but then the precision at this point is really high. So there's certain rejections you can look at this area, and certain levels getting taken out. Then you can get those really tight entries. I think that was a similar thing I did with the entries on gold last time. So I had the sales off of this area right here. If you look at this trade, where is it? You look at the sales I had on gold right here. So that was the same thing. So you can look at this piece, you take those sales, and it's the same thing with what's happening currently on the S&P 500. So you can look for those sales off of this area. Now, if you're not going for precision, then I'll tell you, hold on a little bit, wait for price to give you a violation right here. Once you get a violation, then you really show the price is going to move to the downside, and you can get entries off of areas like this. So that's something I'm looking on the S&P 500. And again, there's no need for me to look at the hourly time frame. So just looking at it on the 4-hour time frame, if we get a breach of this trend line thing, so there's a trend line coming to the upside, you get a breach, you get a test, you see price moving to the downside. And I showed you as well, there's a high possibility this guy can just move again to the upside. There's nothing stopping it from moving to the upside. So you can look at this trend lines from both directions. If you get an impulsive move to the upside, you wait for this correction thing, testing this area, and you see price moving again to the upside. So you can trade it from both directions. You get a rejection, you're looking for sales. You get a violation, you're waiting for the pullbacks, and you're taking the buys. All right, guys, so that's my analysis right there on the S&P 500. Now, this is very important because you see a similar structure thing on NAS100. So let's look at the next pair. All right, guys, so here's NAS100 on the daily time frame. So you can zoom out and look at the bigger picture thing, but similarly to what's happening on the S&P 500. So you're looking at this on the daily time frame. You put the S&P 500 on the daily time frame, is the same structure thing. It's been this impulse correction and stuff like this. Then you're looking at this inability for price to move to the upside, so we're expecting sellers to come in. Now on NAS100, the same thing. It's an impulse thing, correction, inability, so we're expecting prices to drop to the downside. Now when you compare the structure on NAS100 and the S&P 500, I think NAS100 has a better structure thing, because you look at the reaction around this area, price hasn't really closed above this trend line to the upside, so you might see the sales coming in on NAS better compared to what's happening on the S&P 500. So you look at this, it's kind of closing above this area, but I told you guys again, you might see price opening like on, let's say, Mondays. So Monday, Tuesday, you see price dropping to the downside. It's a very big possibility right there. So looking at this on NAS100, it's an impulse correction. There's been an impulse, so I'm expecting some kind of a correction thing to come in and for price to test an area like this. So it's just a simple channel thing. It's just a simple channel for you to understand the market flow. Now let me zoom out on this pair right here. So the S&P 500 and NAS, we've taken out this highs, so we've made new highs on the S&P, we've made new highs on NAS100. So looking at this, based off of psychological levels, if we keep moving to the upside, where is price most likely going to gravitate to? The next psychological level is 25,000, and we're coming off of 20,000. So if there's nothing stopping this pair, so we've taken out these highs right here. And now this is something that's very important. Every time price takes out the highs, so let's say you have the previous high thing, which was this area right here. So every time price takes out the highs, you need to see a pullback thing coming in. So always expect a pullback. It's never gonna take out those highs and just go crazy. Yeah, sometimes you'll see it, but price always takes out the highs and then it gives you a pullback. So let's see, I might show you. So you're looking at this piece right here. There was an impulse right here. We took out these highs, and what happened after that? You had a pullback thing. We took out these highs, you had a pullback. We took out these highs, you had a pullback. We've taken out these highs, we've not really had a pullback thing, but at the same time, we've taken out these highs from an area like this. So you should expect a pullback to come in, and then a movement thing again to the upside, or you see a pullback coming in and even a deeper pullback for the same thing, for the movement thing again to the upside. So that's on the daily time frame. So on NAS100, I'm expecting sales to come in. So, and if you look at this, 1, 2, 3, 4, 5, so that's 5 days. So all of last week we had buys on NAS100. So coming into next week, you might see a counter move, 1, 2, 3, 4, 5, and you see prices coming to the downside. Now I might be completely wrong, and you see this thing just flying again to the upside, but based off of this structure, I'm expecting prices to come to the downside. So on the 8-hour time frame, that's it right there, similar to what's happening on the S&P 500. Impulse, correction, impulse, correction, impulse, and we're expecting a correction to the downside. You have a trend line right here, you have another trend line thing. So all I'm waiting for, rejection, rejection, rejection. So if you see a perfect rejection around this area, some levels taken out, then you could see prices dropping again to the downside, giving you another structure thing. So giving you another structure thing to the downside. And I don't think it's really complex when you look at prices this way. You have a trend line to the upside, trend line to the downside. You're looking at points where prices can bounce off of. Oh, sorry. So let's take this out right there. So that's on the 8-hour time frame. Let's look at the 4-hour time frame. Perfect. So when you look at this on the 4-hour time frame, I set this on the S&P 500. If you're looking for entries on this pair, yes, you might say the sales are coming in, but the best way for you to look at the entries on this pair, you wait for this piece of price action, which is an impulse correction, impulse correction. Once you see price trading outside, you wait for a correction thing right there. Then you're looking for the sales to the downside. So that's my analysis on NAS100. It's really similar to what's happening on the S&P 500. So I'm not going to waste so much time on this one. NAS on the S&P 500, similar price action. You put this on the 4-hour time frame. Same thing. So the S&P 500 on NAS, it has like this mirror image kind of thing. So you're looking at this, you're expecting the sales. You're looking at the S&P 500 and I'm expecting sales as well. I might be completely wrong and price just keeps moving to the upside, but based off of this is something, it's a structural thing I've traded for some time as well. So I'm expecting sales on this one. So that's it. NAS on the S&P, similar price action. Now let's look at the next one, because with US30 it looks like the same thing, but there's some differences. So let's look at the last pair. Alright guys, so here's US30 and this is on the daily time frame, and I told you guys already. So you could see prices moving again to the upside on the S&P, you could see price moving to the upside on NAS, but when you look at US30, that theory seems to make more sense. So the bigger picture thing, it's an impulse correction, you have a bigger channel thing. So you zoom into this area right here. So we are this area right here. So this is going to tell you a lot on this indices. So the first thing, the US30 is the only pair that hasn't taken out these highs. So you're looking at this, US30 hasn't taken out those highs. The S&P 500 has taken out the highs. NAS100 has taken out the highs, but US30, we're still headed to the highest point, which I think there's a minor psychological level right here, 45,000 right here. If you look at this, there's a minor level right there of 45,000. So where is price headed to? Based off of psychological levels, we had a rejection thing. So price traded below 40,000, we came back above 40,000. So looking at this right now, we headed to the next area, which is 50,000. But before heading to 50,000, we still have this area we haven't taken out. So price is headed to the next area. There's a minor psychological level thing there of 45,000, and that's where price could be headed to. Now you look at NAS100, you look at the S&P, but you look at US30, you have the same price action on the daily time frame. I'm just going to zoom in right here. So you have the same thing. You have an impulse inability right there, but for some reason this is the only pair that has broken out of this structure thing right here. So looking at this, you could expect a pullback and for prices to move to the upside, which is the same thing I was explaining right here. You could see prices just breaking out, you get a pullback thing, an inability, and you see price moving to the upside. Same thing, you get an impulse, pullback, inability, and you see price moving to the upside. Now my primary bias on the S&P and NAS is for the sales, but looking at US30 is telling me something completely different. Now US30 compared to NAS and the S&P, there's periods when you see US30 just going crazy and you see NAS and the S&P dumping. So the only two indices I really pay attention to as a mirror image thing is the S&P 500 and NAS100. So US30 sometimes it goes crazy. So yeah, it's like this little brother thing, and you're looking at other siblings, S&P and NAS, they're doing something else. US30 can do something completely different, but it tells you a different story thing as well. So looking at this on the daily time frame, I was expecting a rejection at this area right here. I was expecting a rejection, so we could see prices coming to the downside, but for some reason on Friday this closed impulsively to the upside. So you could see push again to an area like this, and you see prices moving to the upside. So that's something I'm looking at on US30. That's on the daily time frame. If you move down to the 8-hour time frame, so you had a perfect violation of this area, so you're looking at this. Now here's the important thing: if you have trend lines in both directions, you're looking at the same thing. If price comes back to an area like this, it might even come in a little bit deeper, but your best bet or the best interest is a rejection around an area like this, and for prices to move again to the upside. So that's something I'm looking at on US30. Let's say push to an area like this, and then you see prices moving to the upside. So that's on the 8-hour time frame, and let's look at this on the 4-hour time frame. Perfect. So on the 4-hour time frame, you're looking at this rejection thing right here. 4-hour time frame, there's a rejection around an area like this, and it tells you a lot already. So you're looking at this right now. It's an impulse, it's a correction, it's an impulse, it's a correction, it's an impulse. So we're expecting a correction. Now on lower time frames, let's say on the hourly time frame, you can look at this entire piece of price action: impulse, correction, impulse, then we're waiting for a correction thing, maybe to an area like this, and for us to see price moving again to the upside. So US30 is the only indices currently I'll be looking for buys on, compared to NAS100 and the S&P500. The simple reason, we still have this area to take care of. If we start trading outside, then it makes it completely different. So that's it on S&P. NAS, the same thing. If we start trading outside, it makes it completely different. The only pair when it comes to the indices that it has a clear path currently is US30. So you can wait for the pullback thing, then you look for the movement to the upside. So that's my analysis right there on US30 all the way to like the 4-hour time frame. Yeah, but I'm still very much interested on the buys when it comes to gold, and I'm still looking for sales on the DXY. So let's see. I don't know what price is gonna do coming into next week. I'm just looking at it the same way you're looking at it. I have my buyers, I have my anticipations, and then I'm waiting for price to do what it has to do. But with the S&P 500 thing, I'm waiting for sales. With NAS100, I'm waiting for sales. US30 on the other hand, get a pullback, and I'm looking for buys on this pair. On gold, I have this buy position thing. I'm expecting prices to move to the upside, and on the DXY, I'm expecting prices to move to the downside. So that's it. I've gone through all the pairs, and I hope I didn't forget anything. But guys, same thing. I always say this: be patient with your analysis, stay consistent, and above all, make sure you pray. And it's gonna help you a lot. So trading sometimes it's not just about technicals. You need to be spiritual what you're doing as well. So make sure you pray and just asking the Lord, like, show me things I'm not seeing on this chart. Show me things it's difficult for me to see, it's difficult for me to understand, and you'll see probably the breakthrough is going to come in easily. All right guys, so that's the analysis for this week, and I'll see you during the next one. Bye for now.